and you want to put it to work, you should do it now before the boat sails. Why now?
Well, because I think if you look at it now, you've had such massive corrections in stock markets, whether it's commodities, whether it's the equity markets themselves. You know, the Dow Jones is, you know, the major industrial index is down 40% on the year. There's never a better chance now to go in. There's good value out there in a lot of stocks. Okay, you need to make sure you're going into the right things, and that's where the expertise of someone like myself or people that you use like this sort of line would be the people to go to, and then go in and get the money in there now, because if you miss the chance, you're going to miss a big move up. And as we've seen overnight with the way oil's bounced back quite aggressively, and also the currencies have come back quite strongly, that sort of move you might miss out on a day, just be, you know, delaying for a day or 2 days, and you miss the whole boat.
Okay, so what are the right kind of investments?
That's that's the $100 question, isn't it?
$1,000,000 question.
Well, the $1 million question, whatever it might be. Your time, yeah, you've got to set time horizons that you want to achieve a certain goal over now, rather than instant success. I think the good days of...
so in other words, if you invest now, you just got to close your eyes a little bit and open them again in a year's time, because it could still go down, couldn't it?
I think you're still going to see volatile moves. Certainly there's going to be some bad corporate information that's going to come out along the line over the next 6 months. I still don't think we're out of the wood totally as far as that's concerned, but you'd be far better to be invested and sitting there waiting for the rallies to happen rather than sitting it in the bank, because we all know what banks have been, the troubles they've had. Do you trust the banks to hold on to all of your money? Would it be better to just put it into something where it might chug along slowly over the first 2 or 3 months, and then all of a sudden it catches the right move in the market and you're up 10%, 12% overnight?
Can I nail you down a little bit more in terms of what kind of investments? You know, if you can't name specific stocks, you know, what kind of sectors, what kind of markets geographically, etc.? Well,
as much as people have been going on about the negativity of commodities and things like that, I think commodities have come off in such a great amount. You're not going to see overnight the industrial uses of metals disappear from the likes of India and China. So if you have that put that into the equation, and those things have come off, you know, nickel has come off, you know, hugely. You know, and that sort of thing will come back into the equation. So commodities in that sort of industrial metals. And you may, certain other commodities that you want to look at might be people will pay for a bit of safety. They might look at gold as a currency, you know, something to hedge the currency moves and equity moves that could come on in the horizon.
Do you also therefore think, on the flip side of that, that perhaps the last 4 months or so, the dollar's renaissance, maybe the sun is setting on that?
To a certain extent, it might sort of slow down, I think. But I think there's going to be certain things that are going to happen. You're going to have to look at governments, the way they're going to intervene and do stimulus packages to the economies, should they not see further improvements, say 3 months down the line. That's when you've got to look at this, how this is going to all pan out. It's not something that's going to happen overnight. It will be something that takes 3 or 4 months to come into a sort of a bigger picture that actually happens. You know, so you're talking about the first quarter of next year already out of the way before people have got a clear indication of where markets are really going. After that, you then look at second quarter, you might see some growth. If there's good growth signs there from certain areas, then the governments will say, okay, we don't need to stimulate at that point. But any time, I think you could see central banks coming in to move currencies so that there's no real hardships caused as far as that's concerned. And I think there'll be a lot more greater intervention between Europe, Asia and the US in how to get everything moving and the recession out of the way.
I mean, you raise a good point on that, because I mean, we love talking about crises, don't we? We lurch from crisis to crisis here. I mean, remember at the beginning of the year we had an oil crisis, we had a food crisis, and now we've moved from various phases of this crisis: credit crisis, banking crisis. Are we looking at a currency crisis at the moment? Is this the next phase?
I don't think you're looking at a currency crisis, but I think you're looking at the central banks certainly will be monitoring how to make sure the currencies don't appreciate too quickly and don't have a negative impact on the economies as such. So yes, there will be greater intervention from central banks to control things and move things in the way that they want to move it and at the speed that they want to move it.
So we're not looking at an era of currency controls again, are we?
No, I don't think you're looking at currency controls, but you're going to, I think, when you look at what's happening across Europe, the way the governments are getting involved in nationalising banks and things like that, there is going to be a sort of moderation of free money flying around to certainly, definitely. And you're going to look at things that move along in the lines of, we will see a lot more regulatory authorities coming in to just fine-tune and keep things under control of the way they see it. They don't want to see an expansion like it's happened and another meltdown like this. I mean, the last time we had something like this was 1930s, and most of us have never even heard about it. It's only from the great-grandparents you'd have heard anything like this.
And we will be those great-grandparents one day when our great-grandchildren ask us, what was it like back in this credit crisis? Thank you so much for joining us today.
No problem.
Stuart Shrimpton, Director at Intelligent Investments, joining us here in Singapore. We're going to cross over to Shanghai after the break for a quick market update. Don't go away.